Hello and welcome. The Economic Survey for 2025-2026 has been tabled in Parliament, and we have with us today Dr. V. Anantha Nageswaran, the Chief Economic Advisor, who has done this very extensive, very robust report card of the Indian economy. I'm Siddharth Zarabi, and with me my colleagues Neha Batham from Ajtak and Marya Shakil from India Today. And we are going to get the Chief Economic Advisor to talk about the priorities that this survey has outlined and what we can expect in the months and days ahead. Dr. Nageshwaran, thank you very much for your time with us today. I want to get off on the pitch with what Prime Minister Modi said at the beginning of the Parliament session, which is that the Reforms Express, the Reforms Yatra, is going to continue. In all of the detail in the survey, what is it that is pointing us to the continuation of the Reform Yatra?
I think the fact that we have been able to do the deregulation in states and deregulation in the union government, and not only dealing with policy reforms like indirect taxes and direct taxes reforms, but also dealing with the process reforms in the Ministry of Environment, whether it is Ministry of Road Transport, changing the way in which they invite bids not on L1 basis but technical quality basis. So I think what the government has done over the last 15 months or so is to demonstrate that they have sort of grasped the importance of both process and policy reforms. And we mentioned that as an important reason for us to feel confident about upgrading India's potential growth. And on top of that, Chapter 16 of the Economic Survey points out that states have been very enthusiastic in embracing deregulation. So much so that now we are moving on to phase 2, which is like a harder question paper than the phase 1, which was an easier question paper, which all states did very well. So therefore, I think these two combined initiatives of the union and state governments are the ones that give us the confidence that the Reform Yatra or the Reform Express journey is having two equally motivated and enthusiastic engineers, the union government and the state governments collectively.
How much of the role do you think it has to do with the geopolitical uncertainties? And is there a sense of urgency with which now the government is functioning?
I mean, that's a speculation that most people will engage in, but I would like to point out that some of these things have been in the works even before the geopolitical situation became more uncertain. You know, for example, the opening up of the nuclear power sector for foreign investors, private investors, opening up of the insurance sector, and on even the labor code, for example. All these things have been there well before the geopolitical situation emerged as an important consideration in our policy calculus. So I would not necessarily attribute the reform dynamism to the geopolitical situation, although doubtless it would have played its part.
So in continuation with what Maria asked, the geopolitical condition somehow made this deal of deals happen with the European Union, and that will see a positive impact on our exports over there to their 27 countries. And it took a long number of years to actually put it on ground. But coming to see, can we expect a deal of the same sort with the US so that our exporters and manufacturers who have suffered in all these months for the extra 25% tax that the US imposed on us, can we expect anything on those lines so that our exporters also benefit?
No, look, we will all be happy if a resolution is found to the high tariffs that Indians face, but I think it's not, it's beyond my sort of prerogative or ability to put a timeline to it. So in the past, I have expressed my hope that it could happen within a particular time frame, echoing the sentiments given by the Honorable Commerce Minister, but those deadlines have passed.
Will it create more jobs, the deal that we have done with the European?
Undoubtedly, look at for example, the leather and the footwear sector, or for that matter, textiles export, all these days, gems and jewelry. In all these labor-intensive sectors, we have now much lower much lower duty access to the European markets. Of course, the agreement has to be ratified by the European Parliament. That may take 6 months to 12 months before it becomes effective. But I think the opportunities for Indian exporters, particularly in labor-intensive sectors, are the ones that were affected by the US tariff, and they do find now a good market in the European Union countries. So to that extent, this has been a really excellent competitive.
आपके सर्वे ने लास्ट ईयर प्रेडिक्ट किया था और ये कहा था कि हमें 8 से 10 मिलियन जॉब्स अगले 10 से 15 साल तक जनरेट करना चाहिए तो क्या हम उस ट्रैक पर हैं? How far have we able to achieve that, or there's still some gaps, and how do you aim to focus on those gaps?
In the last 2 years, I mean, when I say 23, 24, and 24, 25, we actually have created 15 million jobs as per estimation. So it's double the requirement that we spelled out in the economic survey. Of course, 25, 26 is still early days to talk about the annual job creation numbers, but job creation and export is one part of the piece. The other part of the piece is the deregulation bit, and that is what will generate economic activity, growth, and then job creation. So both are two parts of the same coin. Exports and deregulation.
Staying with this thought, because you have highlighted 3 risk scenarios, and you have also said that the geopolitical turbulence and also, should I say, instability may not be confined to a single year, but could become, to quote you, enduring feature of the global landscape, leading to persistent volatility in investment. Are we prepared?
We are prepared exactly, and that is what the reform process is showing, that we are preparing ourselves to go through this period. If it is short, well and good. If it is long, then we are investing in domestic capabilities. So it's difficult to put a sort of a full stop to your question. Are we prepared? The answer is we are prepared, and that's it. Nothing more to be done. No, that's not the way it is. The preparation is a process. And we are showing enough signs that we understood the importance of dealing with many of these things on an urgent basis. So I'm confident that we are preparing ourselves to deal with this space of geopolitical uncertainty.
Dr. Nageshwaran, since you spoke about science, for the benefit of our viewers across the network, India is being described as being in a Goldilocks phase. And perhaps this is the cumulative effort of the last 8-10 years that we have reached here. It's not happened automatically. Yet the survey makes a very important suggestion. I want you to expand on that. This is with respect to some reluctance in certain quarters of the investment community worldwide to invest in India, although we have seen very large ticket investments, for example, in AI or data centers in the state of Andhra Pradesh being promised recently.
That's right.
What needs to be done to ensure that inflows, both on the portfolio side and the direct side, expand far beyond what they are today?
Well, Siddharth, that's a very multi-layered question. The answer will be a bit long, so I'll try to keep it short. So on the FDI side, of course, once the tariff uncertainty with the United States gets resolved, that itself will unlock a lot of FDI flows. But more importantly, I think to some extent, the Indian rupee depreciation does make production and export out of India more competitive. That also to partially will compensate for the tariff situation, and therefore will draw in some investors to say, okay, now this rupee is cheap, and therefore producing here, I can absorb the higher duties and still be able to export. That is one. The other thing is we have to invest in inviting global value chains into India, because 50 top global value chains are dominating the export from China to the United States. Even if half of them we are able to succeed in persuading them to relocate to India, that will be a good thing. And for that, we need to be able to continue to offer policy certainty and predictability and continuity, whether it is in tax matters, whether it is in export formalities from DGFT, etc. So that is on the direct investment side. I'm just trying to keep my reply short. On the portfolio side, I think, it is cyclical. I mean, portfolio investors were actively participating in the Indian market until 2024. In the last 15 to 18 months, they have been more selling than buying in India. At some point, with the combination of the cheaper rupee and the market and the growth prospects, investors will reassess their bets. I mean, I don't think many people would have anticipated India to strike a deal with the European Union so quickly, and that will also factor into the calculus of portfolio investors. So I don't think I will view that with a particular concern. As long as we keep at what we have been doing, then these mindsets on the part of portfolio investors will shift.
Dr. Nageshwaran, quick follow-up. Is Chinese overcapacity a threat to our industrial capacity and growth?
It is not just only a threat to India, it's a threat to many other countries in the region, but that is something that we need to factor in. I mean, we can't wish away things that are not in our control. We have to take that as a given. I mean, so, and then therefore work doubly harder in terms of improving our competitiveness, which is why we pointed out in the survey and in the presentation to lowering our input cost, whether it is cross-subsidization of freight and power and inverted duty structure and deregulation. So essentially, it simply calls upon us to get our competitiveness act together in a much shorter time frame.
So you said that this is a reform express and the Prime Minister has also focused on that. What is there for the common man this time in the budget, since you've already reformed the direct taxes and the GST structure? Is there still enough room for consumption stimulus and the tax structure to be further simplified?
No, it's a matter of another 3 more days for us to wait for the budget.
And also, my question is to the gold prices and the silver prices. Gold prices are at all-time high, 1.68 per 10 grams. Silver prices have touched another record. When do we expect them to normalize or to, go back to their original levels of actual consumption, which the people are looking at in times of their needs in terms of marriage and the other valuables that they...
No, in fact, your question about gold and silver actually partially answers your earlier question about consumption stimulus, because given the holdings of gold and silver in Indian households, there is a latent wealth effect here, which we are not factoring in. People who have been having existing stock of gold and silver are going to feel wealthier compared to what they would have felt about their net worth 1 year ago.
In fact, the Indian households have touched the record, like they hold that.
Yeah, the household net worth would have gone up significantly in the last 2 months because of the increase in the
Also, in relation to Maria's question, that are the geopolitical conditions only responsible for their rise, or the...
Look, in the case of silver, you might point to industrial use and the potential shortages, etc. But in the case of gold, it's clearly it's a geopolitical play. It's also a play on certain lack of comfort with fiat money itself in general. Considering what is happening with the potential for depreciation in the US dollar, or the potential for negative real interest rates in developed countries, because they have this huge public debt and they have to bring it down, government debt, and markets are anticipating. So the gold prices are reacting to the way policy may evolve in those countries, which may keep interest rates too low, and therefore the attractiveness of holding those currencies may not exist.
Right time to sell, hold, invest, do what?
No, you are asking me to put on the hat I used to wear for previous 20 years before I came into the government. I'm not going to walk into the trap. But in general, I do feel that these are long-term trends. I don't think they are short-term trends.
So in terms of the Indian rupee, you're speaking about Indian rupee being cheaper. You also say that Indian rupee today is perhaps a victim of geopolitics and global power gap. Then how are you looking at our competitiveness vis-a-vis the world?
No, I think the current weakness in the Indian rupee so far is actually adding to competitiveness, because it is not increasing our import costs. Crude oil prices are well behaved, and barring copper, many industrial metal prices have been well behaved. Food inflation is low, etc. So if at all there is a time for the rupee to depreciate, this is as good a time as any for this to have happened. Okay, but the point is, if we are looking for a strong and stable currency, the route to a strong and stable currency down the road lies through the path of a cheaper currency, export competitiveness, mainly through manufacturing, because we have been exporting services very well, and that hasn't really given us a stable and strong currency. And that is what economic history tells us. If you want a strong and stable currency, you got to get good at manufacturing. You got to get good at manufacturing exports. And it is not just only a policy matter. Indian private sector has to do innovation, R&D, and be willing to face global competition. Therein lies the path to a strong and stable currency down the road.
Okay, interestingly, if we were to look at some phrases which have been used in your economic survey, growth, artificial intelligence, employment, inflation, and jobs, these are 5 most frequently mentioned terms. And growth, for instance, has been used 889 times, AI and employment mentioned 387 and 305 times respectively. This certainly shows what are the priorities of this government. We are looking at AI finding a mention as an area which is going to be evolving far more. How are you looking at the placement of AI vis-a-vis growth?
In terms of reaching services to parts of India where human shortages are there, whether it is nursing, whether it is radiologists, whether it is healthcare, elder care, etc. In some of these areas, I think AI can compensate, but not in all areas.
Is there a bubble in AI which needs to be corrected?
Not necessarily in our country, but I'm talking about the AI valuations in the developed world. Probably yes. But when you're talking about AI and their impact on India, there are some areas where I think they're definitely going to be a huge complement to human resources. But at the same time, we are to focus on the cost of AI deployment, whether it is in terms of getting the computing power, whether it is in terms of land and power and water resources, and also train our people to take up skills in areas where they will be immune to the diffusion of AI. So in cognitive jobs, yes, AI can take over human roles or complement them depending on the kind of job you do. But there are multiple areas in which human role is important, whether it is in elder care, early childhood education, culinary skills, and in dye making, carpenting, civil engineering, plumbing, electrical, all these things you still have manual. So it's very important for us to talk of AI and growth to give a certain respectability to skill areas which have been neglected in the past. And that is one way to co-live with AI.
Dr. Nageshwaran, I want to take that Rupee point forward that Marya raised, and also the flip side would be a trade-off. You as a professional economist know this, but for the benefit of our viewers, there is obviously a trade-off between export competitiveness and lower input costs. If we are to become a manufacturing hub of the kind that we aspire to be, import costs will also feed in and distort the equation. Is there a trade-off point, and do you think this is the time, this is the level that perhaps we have reached trade-off?
No, I don't think so. I think if I understand your question correctly, at what point the rupee level becomes negative? Because
you won't call a level. That's why I didn't put it to you that way.
No. I mean, so it is very difficult to be precise about a number, a numerical value there. Say at this point, the rupee becomes more of a negative, a weaker rupee becomes negative because it raises the import cost more than it incentivizes better exports. That is not possible to say so. But in general, the work we have done in the econometric work, and we are showing it in the survey, that on balance, India actually benefits from a weaker rupee, considering the kind of manufacturing competitiveness we have. So the answer, therefore, is because when a currency becomes weaker, naturally imports become costlier. Yes, unavoidable imports will become, therefore, costlier. To that extent, it's a burden. But unavoidable imports are relatively, crude oil, fertilizer, some essential base metals, etc. Gold is not, you wouldn't call it essential import.
Yeah.
I mean, it's a consumption item in some sense, but it's not an essential import. Those becomes expensive, and to the extent it discourages gold buying, probably it's not a bad thing from a macro perspective.
Should we be prepared for the rupee to depreciate further?
It's a very difficult question to answer because it can turn on a dime, as they say. I mean, so the rupee.
Yeah, if the US deal happens, you will see a reverse.
Exactly. So I don't think it is appropriate on our part because what we say also influences expectations. Therefore, I shouldn't be talking loosely about okay, the rupee depreciation can go up to X percentage or Y percentage. I think that is very difficult also because what is happening today isn't only unique to the Indian rupee. It's happening to many other emerging market currencies.
It's the dollar.
So I don't think we should be overly concerned at this point because it is a global phenomenon. And right now, the net cost benefits are in our favor of a weaker rupee. Yes, and we have ample foreign exchange reserves, and we are diversifying our export destinations. So we are doing all the right things, and therefore we should be a little bit calmer about the rupee.
Keeping that point is essentially about the free fall, what is being seen of the Indian rupee, the depreciation, sir. All these trade deals which has happened particularly in 2025. And of course, the mother of all deals, which the Prime Minister said is the deal for the global good, which is with the European Union. Can that, or has that had any impact on the overall assessment of the Indian currency?
Early days. I mean, the European Union agreement happened barely a couple of days ago. So it's under other countries are relatively smaller in size. And moreover, we should remember that all these countries have to go through their respective internal processes before they actually become effective. I mean, even in the UK case, the parliament approval is yet to be obtained. So for Indian exporters to enjoy the benefits of easier access to those markets, that is still not yet a reality because the agreement has been signed, but the internal processes are going to happen in Europe and it is happening in the UK Parliament as well. Once it is done, then you will begin to see the real economy impact of this.
Okay, so that's going to be perhaps a couple of more quarters.
I think so. I mean, in the case of UK, it may happen in the next couple of quarters. I think the European Union agreement also may take anywhere between 6 to 12 months before it completes all the internal legal vetting and the parliamentary approvals in Europe, etc.
Dr. Nageshwaran, one final question from my side, and we are looking beyond the budget because obviously the budget can't be revealed here, but you've been very candid in your responses. At the end of the month, we will see a big overhaul of big data, the macro statistics. And this is being noticed around the world. It was even spoken about in some forums at the World Economic Forum. How significant is this exercise? And as a result of that, can you look ahead and tell us what will it mean for our overall growth numbers?
No, I don't think it is possible for me to spell out what it would mean for growth numbers or whether the GDP base itself will become larger, smaller, remain unchanged. All possibilities are open. It is about methodological improvement. Definitely, we will be able to capture more parts of the economy on a regular basis than we have been doing so far. That is a big improvement. And second, some of the goods which we were not producing even 12 years ago, like smartphones, is not part of the index of industrial production. That will become now part of it. And I think given the fact that incomes have grown, food will be a smaller component of your monthly consumption basket. That will get reflected. So I think this is about a methodological improvement, capturing more formal activity and a more accurate depiction of real economy using high frequency data, etc. Whether a big improvement in the GDP size would then mean that we have not been capturing a large portion of GDP.
But will it answer the IMF's criticism? They
No, no.
gave us a C grade.
No. IMF's criticism was about many of the things that will be fixed, which was base year not being revised for 15 years, and the basket of consumption and the basket of items in the industrial production. All these things are the ones that will get fixed. And IMF grade, by the way, is on one or two specific aspects that influence the overall. But the overall rating for India's statistical system was a B. It's on national income portion that was rated a C. And I think what Ministry of Statistics is engaging in, which we will all see on February 27th, will fix most of that criticism. And I think IMF did not question the reliability or credibility of our numbers. Those questions were more technical in nature.
Absolutely, yeah. If the IMF has a B or a questionable C, I question that. It's very clear that Dr. Nageshwaran gets an absolute grade A, in fact, a triple A grade for the survey, for its depth, for the diversity of its content and all the surveys.
Consistency.
Absolutely. Since 2022, you've been here, and it is a treat not just for the watchers of India's economy, but even for those who may have even a passing interest in how India's path towards Viksit Bharat will take off. Dr. Nageshwaran, thank you very much for your time with us today. On behalf of the entire India Today network, we thank you for your time with us. So much for a wrap on this conversation. We'll be back with more. Until then, namaskar and goodbye.